Hi class, today we're going to be looking at problem 18, chapter 2b. I'm going to share my screen with you, and I've made an Excel spreadsheet for this problem. So you should be able to see problem 19-2b in Cengage. But let me go to my Excel spreadsheet. So hold on just a minute. I'm going to stop sharing this with you. And we'll try this again. Click on the right thing this time. Okay, this is a little better. This is my Excel spreadsheet that I prepared for you. It's problem 19-2B that we're doing, and we're working with job order cost accounting. And what they want us to do in this problem is they want us to create journal entries, and we're going to also post those to a T account, and we're going to prepare a schedule of unfinished jobs and completed jobs. We're going to be the Hildreth Company, and we're using a job order cost accounting system. The following data summarize the operations related to production for April, the first month of operations. The first thing they want us to do is to journalize this transaction A. Transaction A says materials are purchased on account of $147,000. When we put this in journal entry form, we're going to debit the materials account for the total amount of the materials purchased. We debit materials because it is an asset account. The asset account is increasing because we bought some new materials, and so therefore we're going to debit it in the journal. We also bought those materials on account, or we purchased them on account. So our accounts payable would be involved. That's going to be our credit because accounts payable is a liability. The liabilities are going to increase on the credit side. So in this journal entry, we debit materials for $147,000 because the asset account materials is increasing, and we're going to credit our liability account called accounts payable. In the B transaction, they are showing you the materials that were requisitioned and the factory labor that was used in the manufacture of the products. The computations for transaction B consist of all of these jobs that we've been working on through this accounting period. They've given us the direct materials that went for each one of these jobs or went into each one of these jobs, and they've given us the direct labor that's gone into each one of these jobs. Now, the direct materials and the direct labor are going to enter into the production process. So when we create the journal entry for this problem, our materials are direct materials, and our direct labor are going to be debited to the work in process account. Our work in process account is an inventory account. It is an asset and should be debited. What I've done is I've added up all the materials, the direct materials that is. I've added up all the direct labor, and when you combine direct materials with direct labor, that's how I'm getting the debit to the work in process account. Now, class, in the real world, you probably could have handled this journal entry and done the materials and the labor separately. But in Cengage, they don't give you enough room in the journal to be able to handle these transactions separately. So you must put the transactions together. And so direct materials, the total of the direct materials, that were used in the production process plus the total of the direct labor that was used in the production process are combined together to get the one debit to the work in process account of 262,490. In this part of the problem, they also gave us the indirect materials and the indirect labor. Indirect materials and indirect labor are a part of factory overhead. Our factory overhead is an account that is treated like an expense. It is debited on the increase side, or the increase the increase side of factory overhead is on the debit side. But we're going to combine the indirect materials and the indirect labor together to get our total debit to the factory overhead account. Again, you could have treated these as separate journal entries, but you won't have enough space in Cengage. So I'm really trying to show you what Cengage has done for the journal entry for Part B. Now, our credits to this journal entry would be a credit to the materials account. The materials would be the direct materials plus the indirect materials. So the total of direct materials and indirect materials is going to be credited to the materials account. Remember, materials is an asset account. When we use the materials, we are decreasing the asset account. And to decrease an asset, we would credit. Our final credit is to wages payable, and that's for the amount of the total direct labor plus the total of the indirect labor. So direct labor and indirect labor is our total labor that would be credited to the wages payable account. Wages payable is a liability that we have set up in this transaction, and our liabilities are increasing. To increase a liability, we will have to credit it. This amount, again, is for the direct labor and the indirect labor. So all of this transaction here is a compound entry that we've created to show what we placed into process, what went into factory overhead, and that came out of materials and was into the wages payable account, went into the wages payable account. So in the next part, transaction C, they're telling you that they had some factory overhead costs that they incurred on account. Remember, factory overhead costs can be anything that was related to the factory. In this case, they didn't give us a breakdown of the factory overhead costs. They just gave us a total amount of factory overhead. Since factory overhead is an expense account, it will be debited for the total amount of costs that we have incurred. Our accounts payable, which is a liability account, would be increasing for the 6,000. And this is how we would do the journal entry for transaction C. For transaction D, we're going to record depreciation of machinery and equipment of $4,100. For some reason, they didn't tell you that this was factory machinery and equipment, but it is. And if it's factory machinery and equipment that we are depreciating, it's going to be increased to the factory overhead account, which is an expense account. Again, factory overhead is made up of all the factory expenses, and depreciation expense will become a part of factory overhead on the machinery and equipment that they're using in the factory. If this had been depreciation of equipment that they use for the office, we would have had a debit to an administrative expense, or depreciation expense would have gone in as an office expense, if that makes sense to you. But this is for the factory, and even though they didn't tell you that, they're assuming that you know that this is factory. I'm telling you it's for the factory, and so the factory overhead account is going to be debited. We're going to have a credit to our contra asset account, accumulated depreciation. You'll remember from accounting 120, accumulated depreciation increases on the credit side. And every time we depreciate, we increase the accumulated depreciation by crediting it. So our factory overhead was debited for the amount of the depreciation expense on the factory machinery and equipment, and we will credit accumulated depreciation for the total amount of the depreciation that we're adding to the accumulated depreciation account this year. In Part E, they're telling you that the factory overhead rate is 40% of the machine hours. Machine hours used, they have given you. Notice they've listed each job and the amount of machine hours that it took for each one of these jobs. The factory overhead rate is a rate that we would apply to our factory overhead. You might remember in the discussion for this chapter that we estimate the amount of the factory overhead based on a predetermined overhead rate. You did not have to calculate this predetermined rate. They gave it to you, but you did need to know that it was based on machine hours. So you would have determined the machine hours for each job and multiplied it by this $40 rate, and that will give you the applied amount of the factory overhead, which is our estimated factory overhead. You're going to do this for each one of the jobs. Take the machine hours and multiply it by the rate to come up with the factory overhead that would be applied to each one of these jobs. So you're just multiplying to get the applied factory overhead amount. Then what I did was I totaled all the applied factory overhead for this period of time. The total amount is 40,480. And what you will do is you will take this applied factory overhead, the estimated amount, and you will place it into your work in process inventory account. So work in process, which is an asset, is going to be debited for your applied amount of factory overhead. The total applied factory overhead was 40,480, and I just plugged it in here as a debit to the work in process account, because work in process is a accumulation of your direct materials, your direct labor, and in this case, the factory overhead. So factory overhead is going to be debited to the work in process account for the amount of 40,480. It's each one of the applied amounts. Our factory overhead account, which is the expense account, is going to be reduced in this case. In other words, you're going to transfer from factory overhead and place it into the work in process account, so you will know what you have completed in work in process for the period. Again, your work in process, you will remember, was debited for the materials and the labor, the direct labor, materials, labor, and now we've got the applied factory overhead that would also be debited to this work in process account. Eventually, we're going to use our T accounts to show you how the journal entries were placed into the T accounts, which represent your ledger accounts. But right now, we're still doing the journal entries. And that's how you do transaction E. For transaction F, you are completing jobs number 101, 102, 103, and 105. So what I've done is I've listed each one of those jobs separately. And actually, in a job order cost accounting system, you would keep up with the cost card that would have the job number on it, the direct materials, the direct labor, and the applied amount of factory overhead. But I just summarized these in tabular form by job number. So job number 1, I picked up the direct materials that was given from transaction A. So we'll scroll back up here for just a minute to show you where the direct materials for job number 101 came from. They also gave us the direct labor. So in our job cost sheets, we're going to record our direct materials and our direct labor for job number 101. So job number 101, direct materials and direct labor. We also need to determine our applied factory overhead, which came from transaction E. Remember, our applied factory overhead was the machine hours times the factory overhead rate, which will give us 6160. And that's what I'm going to plug into my job cost sheet for job number 101. So my job number 101 job cost sheet would consist of materials, labor, and overhead. On this job cost sheet, you would add all 3 of these together to get the total cost of job number 101. For job number 102, we do it in a similar manner. We pick up our direct materials from transaction A, our direct labor from transaction A, and we pick up our applied factory overhead from transaction E. Add the 3 together, and that gives you the total cost. You do the same thing for job number 103 that you finished and 105 that you finished. These were the jobs that were actually completed for that period of time. So once you know the job cost of each job that is completed, combine these total costs together to get the total cost of the jobs completed during this period of time. We're going to transfer this cost from our work in process. In other words, we're going to credit our work in process for the total amount of our finished jobs, and we're going to debit it to the finished goods inventory account. So finished goods inventory, which is an asset account, would be debited for $175,090. We would credit our work in process for $175,090. Our finished goods were transferred to finished goods. They increased the asset account, finished goods inventory. To increase an asset, you would debit. They will decrease our asset account, work in process. To decrease work in process, an asset account, we would credit. The next transaction that we need to record is for jobs that were actually shipped and customers were billed as follows. Job number 101, notice I put these in order. We have shipped jobs 101, 102, and 105. So those jobs that we completed in the last entry, we are shipping those with the exception of one of the jobs which we did not ship. They told us in our instructions that we shipped job number 101, 102, and 105. They also are telling you that the amount that we are billing our customers is going to be $62,900 for job number 101. So notice I put in a column for accounts receivable. When we bill our customers, we're going to end up debiting our accounts receivable, and job number 101 was $62,900. We also have got to record our cost of these jobs, and the cost of goods sold is going to come from transaction F. Let me back up for just a moment. I skipped the sales. When you bill a customer, you're debiting your accounts receivable, but you're also crediting your sales for the amount that was billed. So I just made up a column for sales because we're going to keep up with the total sales of each one of these jobs, as well as the total accounts receivable for each one of these jobs. The third column that I had set up is to show you the cost of goods sold from Part F. The cost of goods sold, if you will remember, for job number 101 would be equal to the total cost. So this 44,980 is where I'm getting this amount. And since we shipped and billed job number 102, the total cost of it was $57,640. And we shipped and billed job number 105 of $39,990. So this job number 103 that we have not shipped and billed, that's going to remain in your finished goods account. But getting back to the journal entry for G, we're creating two journal entries because in a perpetual system, we need to record the amount of the sales, and we also need to record the amount of the cost of goods sold. So my accounts receivable total was $189,100. We would debit that because accounts receivable is an asset account, and to increase an asset account, you will debit. Accounts receivable would be debited. The sales, which is a revenue account, is also increasing by the total amount that you shipped and billed, which was $189,100. Once we have created our journal entry to record the sale in a perpetual inventory system, we have to show that these goods left our company. They were shipped, and so they're out or coming out of the accounts. And so we're taking them out of finished goods because they're no longer in finished goods. We shipped them to the customer itself, and we're placing it into the cost of goods sold. Cost of goods sold is an expense account, and it's increasing for $142,610. That was the total amount of the cost of goods sold for jobs 101, 102, and 105. We debit the cost of goods sold account to increase it, and we credit our finished goods account to show that we've moved these from finished goods to the customers. We ship them. And so there are two journal entries that you have to make with this transaction in a perpetual inventory system. Now, part two of this problem wants you to post the appropriate entries to T accounts. They only wanted you to keep up with the T accounts for work in process and also for finished goods. So for work in process, I'm going to take all of my information that I got from transaction B, transaction B was recorded in the journal here. Notice that we debited work in process for $262,490. The direct materials and the direct labor are debited to our work in process, which is the left side of the T account. Remember, work in process as an asset is going to increase on the left side. So from transaction B, we debited the work in process account. For transaction, and so all we're doing is posting to this account. So we started here. Here was the debit to work in process. We put that in the T account. Looking at our T accounts as we move forward, the next thing that we did is we debited our work in process for $40,480. So that came from transaction E. Then in transaction F, we credited our work in process for $175,090. That's where I'm getting this. And then they wanted us to balance the accounts. We will add our two debits together, subtract our credit, and what we have left in the work in process account is $127,880. And this amount should balance up with your unfinished jobs that they're going to ask us to do in a minute. In part two, they just wanted you to balance the work in process account. So add your debits, subtract your credit, and your remaining balance is $127,850, which represents your unfinished jobs. You're still going to be working on these next period. They also wanted us to create a T account for finished goods. Finished goods is an asset account and it will be increased on the debit side. Notice we've got an increase to our finished goods for $175,090. I want to show you where that came from. And that came from transaction F. So $175,090 we had a debit to finished goods for. That's where this came from. This came from transaction F. We also had a credit to our finished goods account for $142,610. That came from transaction G. So this was our addition, this was our decrease. We combined them together. Our remaining balance is $32,480 in finished goods. This represents the leftover job that was not shipped. We had one job that was left over. In part three, they want us to prepare a schedule of unfinished jobs to support the balance in the work in process account. So we want to show where this balance came from. And what we're going to do is we're going to prepare a schedule of unfinished jobs, which is really just a job cost sheet for each one of these jobs. Notice we're picking up for job number 104, we had direct materials. That came from our B transaction. Our direct materials is $38,200, and our direct labor of $36,500 also came from transaction B. So those two come from the information from transaction B. Our applied factory overhead came from these amounts right here. Now you have to remember which job that you're working on, and this job was 104, and so job number 104, the total amount that we credited that was 9520, and that's where they're getting this figure here. So our direct materials and our direct labor came from transaction B. Our applied factory overhead, I believe that was from transaction F. No, it wasn't. Sorry. It was from transaction E. It's where we got the applied factory overhead. And we're going to combine our materials, our labor, and our applied factory overhead together to get the total cost of job number 104, which is still in work in process. This 8420 is a part of this 127,880 total amount work in process. The other job that we did not finish that we were working on was job number 106. The direct materials and the direct labor would come from transaction B, and the applied factory overhead comes from transaction E. All of these added together are 43,660. So the total cost of job number 106 is 43,660. I would add it with my other unfinished job to get total unfinished jobs of 127,880. Notice this reconciles this, it balances out with your ledger account. So this is just showing you what you have left over that you need to finish for the next reporting period. In part 4, they are also asking you to prepare a schedule of completed jobs, which would make up the finished goods inventory. Finished goods is what we have left on hand. We have not shipped or billed our ending balance in our finished goods. This is what we've got left over. And because we know from transaction F, we completed these jobs, what we have to understand is that there was one of these jobs that we didn't ship, and that's what will remain in our finished goods inventory. So what we did ship was job number 101, 102, and 105. What we have left is this job number 103. And basically you could take this, if you had it in Excel, and copy it and paste it into the schedule of unfinished jobs. So job number 103 was what we did not ship, but we had finished it. The materials and the labor and the applied factory overhead all added together are 32,480. This will reconcile with your finished goods inventory. And that's all there is to this particular problem. So we'll stop sharing here, and we'll see you next time. Bye-bye.